Hey, soldiers, we got a lot going on in the global banking industry. That sector is on fire today, and that's troubling. You and I both know these banks are kind of the linchpin to the entire economy. And we saw what happened with the markets when smaller banks like SVB and Signature had issues. Now we're talking issues with possibly Deutsche Bank. All right. Remember, Deutsche Bank, Germany, that's the largest economy in Europe, doing gangbusters. So we saw where UBS acquired Credit Suisse, right? A lot of people say, oh, well, it's Credit Suisse. It's not like they were, on par with a lot of the other major banks of the world, the JP Morgans and Deutsche Banks, for example. But hey, wait a minute. This combination of UBS and Credit Suisse creates an institution. You want to talk about too big to fail? Creates an institution that's twice the size of the Swiss economy. All right, so we're dealing with that. Okay, that's the reality of the day. Janet Yellen is actually meeting today, the 24th of March. She's meeting, and the meeting is not public. They're not divulging why she's meeting, what the subject will be about. Let's get into a lot of this. We'll get to Janet Yellen in a minute, but there's some concern about Deutsche Bank being the next one to have some major problems. Yesterday, while attention was still focused on the U.S. banking system, the ongoing botched response by the Fed, and especially the Treasury Secretary, she went out there and we profiled this, and she actually said, hey, look, some depositors here in America are more equal than others. And I'm not going to, I being Janet Yellen, she said she's not going to pull the wool over your eyes. She's going to tell you the truth, and said that some banks, they're not going to make you whole like they've done with the depositors at SVB and Signature. Okay, she said it really depends on the subjectivity of how her and others up in that rarefied air of banking and government are feeling on a case by case basis. Now, 2 weeks ago, we noticed that we saw that SVB collapsed, and we're still not looking at a stable situation where America's confidence in the banks have been restored. I think this is going on around the world. So, thereby assuring the U.S. is about to slam headfirst into a brutal recession. That's coming. We've been talking about it for a long time, and they played around with the numbers, try to convince us that we weren't in a recession. In fact, we've probably been in a mild recession since mid-2022. If you look at all of the data, all of the honest data, which is getting harder and harder to find unless you look at sites like John Williams' Shadow Stats, Zero Hedge, and actually, the government still publishes the correct figures. The media doesn't report it. But if you go into these government figures like the unemployment report and really dig in, you'll find some jewels, and you'll find some straight up lies when you compare it to what the media is reporting and what these politicians are saying from the from their podiums. Okay, so Zero Hedge pointed out that something bad had taken place recently in Europe. The credit default swaps of perpetually semi-solvent banking giant Deutsche Bank were quietly blowing out to multi-year highs. We didn't have to wait long before everyone else also noticed, and this morning, it's official. The crisis has shifted to Germany's and Europe's largest bank. And even Bloomberg is now writing that Deutsche Bank, quote, has become the latest focus on the banking turmoil in Europe, as ongoing concerns about the industry sent its shares slumping the most in 3 years, and the cost of insuring against default is rising, unquote. The bank, we're talking about Deutsche Bank, which has staged a recovery in recent years after a series of crises that nearly brought it down, said Friday it will redeem a Tier 2 subordinated bond early. All right, so we're seeing the giants start to have some difficulty here. And look, this is as a result of kicking the can down the road, of Biden coming out and saying we're not in a recession, although we met the definition of recession that had put us in that state, for many, many years and decades prior. Traders do not have the risk appetite to hold positions through the weekend. This is Deutsche Bank. Given the banking risk and what happened last week with Credit Suisse and regulators. Confidence, guys, is dropping like a stone, and it's not localized. It's not just here in America. It's important you know that this is a global phenomenon. I don't know. I don't watch TV news. I don't know to what extent they're reporting this. They're probably talking about, the imminent arrest or the possible arrest of Donald J. Trump. And yes, that may or may not happen, but I can tell you right now, they're not reporting on what's going on with these banks out there. All right, now we got a statement from UBS Wealth Management Chief Investment Officer Mark Heifel. Okay, now get this. This is coming from the institution that just purchased the beleaguered Credit Suisse. He says confidence is fragile. Market volatility is likely to stay high, and policymakers may have to go further to make sure faith in the global financial system stays solid. He goes on to say financial conditions are also likely to tighten, meaning money's going to get more expensive, okay? It's going to be harder to go out there and finance things. This increases the risk of a hard landing for the economy, even if central banks ease off of interest rate hikes. Listen, hard landing, that's government folks speak for lots of layoffs, okay? Just an economy that is going to be very, very, might make 2008, 2007, 2008 look like, Disneyland. Guys, get ready, prepare, go and make sure that you are getting with family members and figuring out ways to, lower expenses. Even if it doesn't involve you living in the same house, maybe it involves you going out and buying a Sam's Club membership, then taking several households in the family over there and doing some bulk shopping to reduce cost and make sure your family stays safe. We got to really think about these things. They talk hard landings. We talk about the need to continue to feed our families. All right, now we got Janet Yellen. She convenes an emergency financial stability meeting today, Friday, the 24th of March. They're not telling us what this meeting is about. They're not even telling us when it's going to happen, and it's not open to the public. So they will not. This revolution will not be televised. Bloomberg just reported that Treasury Secretary Janet Yellen, who was single-handedly responsible for stoking and restarting the bank crisis on Wednesday, and she did that by doing what I said earlier, not saying that, listen, we're going to rely on the FDIC system. It's, equal 250 for all depositors. If you've effed up like Roku did and you got $500 million in a bank account, then guess what? That's on you. But what she did was the opposite, okay? And just said, little guys, your little bank account at your little community bank means nothing to me. It's basically what she said. I'll tag the video. We've got her, hemming and hawing, going through it in her own words. All right, so she's going to convene the heads of top U.S. financial regulators. She's probably in that meeting as I make this video. This was an unscheduled meeting of the Financial Stability and Oversight Council. Okay, unscheduled, right? I remember when I was a firefighter, none of those emergencies were scheduled. They were all emergencies. Get it? The meeting will be closed to the public. The Treasury Department said in a statement. The Treasury didn't say what time the meeting would begin, and it wasn't immediately clear whether the council would issue a statement following the meeting. So they're meeting in the dark, guys, and not clear. Even if they come out and tell you what, they're not going to give you the whole story. But if this is an unscheduled meeting, something big is going on. The step comes as regulators continue efforts to instill calm in financial markets and among bank depositors following the recent failure of two mid-sized lenders in the U.S. and near collapse of banking giant Credit Suisse Group AG before its government broker takeover by rival UBS Group. Remember also, this is a Friday. The whole SVB thing happened on a Friday. Okay, so this is the time that the Treasury, the FDIC, and the Fed make these kinds of moves. Okay, so is another bank about to go down? So the members of this particular board, the Financial Stability Oversight Committee, they include Federal Reserve members, the Federal Deposit Insurance Company, and several other regulatory agencies. The council's voting members are Secretary of the Treasury, Chairman of the Fed, Jerome Powell. So you got Janet Yellen and Jerome Powell up front. Comptroller of the Currency, Director of the Bureau of Consumer Financial Protection, Chairman of the Securities and Exchange Commission. Look at that. That's now we're getting into stock market. Chairman of the Federal Deposit Insurance Company, FDIC. Chairperson of the Commodity Futures Trading Commission, Director of the Federal Housing Finance Agency, Chairman of the National Credit Union Administration, an independent member with insurance expertise, who is appointed by the president and confirmed by the Senate for a 6-year term. All right, guys, so these are all of the principals, big boys and girls meeting. We don't know what it's about. We will come to you with any statement and parse it out and try to figure out what they were meeting about. Are they going to get together and say, hey, we need to start lowering interest rates? That would be crazy, considering just the other day they got raised another quarter point. Not sure what's going on here. It's very interesting. Stay alert. Stay tuned to the Soldiers of Finance channel. If you haven't subscribed, go ahead, hit the subscribe button, and make sure you hit the bell icon, because that way, when something occurs and we release a video about it, you'll be one of the first to know. All right, so go ahead and watch this video. This one we just put up this morning also. Fed's shocking confession about how it wants to control society. Look, check this out. The Fed came out here recently with a statement. It was in a confidential document that was leaked. And they basically say, look, we want to add a fourth function of money. That fourth function is going to be societal control. You got to watch that video. Check it out. Guys, I'll talk to you soon.